Hey, welcome everybody to the 40 Finance channel. If you've been following the news, I'm sure that you've seen the FTX cryptocurrency exchange collapse, bankruptcy that is going on right now. And honestly, it's not even the only one, right? We've seen tens or dozens of different exchanges go down here in the past year. I myself lost about $1,500 in invested capital when Voyager went bankrupt, and we'll have to see what becomes of that. Ironically, FTX was going to buy Voyager, and obviously that's not going to happen anymore. So I've chalked that up to a loss. I mean, even if I got back everything in that Voyager investment, it would be down to probably like $600 or something, just the way cryptocurrencies have went down. And lots of people have lost much more than I have. So it's a terrible, terrible story. And as someone, though, who primarily invests in the stock market, it's hard not to think about what impact this cryptocurrency collapse and exchange bankruptcies is going to have on the stock market, right? It's obviously a very negative story, but is it a negative impact on the stock market? And I've been doing some reading on my own and thinking about this myself in the background, like how will this impact the stock market? And I've kind of come to the conclusion that it might be actually good news for stocks at the end of the day. So I'll go through my rationale, share it with you. Obviously, it's just an opinion. Be interested to hear what you guys think. So don't forget to leave your opinion down there in the comments. Now, before we jump in real quick, I do want to call out that Seeking Alpha, which is a stock research platform that I use, you'll see a lot of it here today on this video. They are having a massive sale here in the month of November, $99 for a full 12 months of Seeking Alpha Premium. Lots of great features. I talk about it all the time here on this channel. This is not a crypto exchange. This is not a stock market exchange. This is a research and opinions platform. You'll see it here in a second. But if you're interested in learning more about that special deal, my affiliate link is down there in the description. Potentially help support the channel. I appreciate it. Now let's jump into my rationale on why the crypto collapse might be good news for the stock market. All right, the first thing to keep in mind here is just how much money has essentially evaporated off the face of the planet. In terms of investment losses, CNBC here projects that investors have lost more than $2 trillion since the peak in last November. So that's $2 trillion, and let's call it paper wins and losses that have evaporated. Now, at the same time that this has went on, if you're looking at 2022, the stock market has went down as well, right? So I believe the S&P 500 here in November is down about 15-ish%. Year to date, the QQQ, which is a big one that I follow, that's down almost 30%, depending on which day you look at it. So there have been losses across these asset groups. But I think, it's well documented that crypto has lost considerably more, and we'll look at those charts in a second. Now, on top of the paper wins and losses, or the valuation decline in crypto, you had a lot of scamming that was going on in the crypto space. And last year, or I should say this year, the FTC reported that last year in 2021, that scam losses since 2021 topped $1 billion. And if you go down here, there's a couple interesting stats in here. So according to the latest FTC data spotlight, since the start of 2021, more than 46,000 people have lost over $1 billion in crypto purely to scams. So scams can be a lot of things, right? It could be, I'm going to invest your money, but I just take it. There's also a ton of scams that go on with folks just getting wallet keys and stuff like that, and just stealing the money right out of people's, bank accounts, or I should say crypto accounts. So there's a lot of different avenues to scams, far beyond just the market valuation of these cryptos going down. And what the conclusion that they came to, at least in their math, that's about 1 out of every $4 is reportedly lost to fraud during that period of 2021. Okay, so we have scams, we have valuation demise, and then, depending on what story you read, FTX by itself has lost at least $1 billion in client funds. And this is even before, these bankruptcy proceedings go on, if anything even comes out of that. So funny enough, FTX was the company that bid on the Voyager bankruptcy. And there was speculation in there that maybe customers get 50-60% back of their actual coins, which of course have actually lost value since then. So I don't know what to say about bankruptcy proceedings and what you could expect to get out of it. But right off the top of the bat, okay, right off the top, at least $1 billion of whatever FTX holds, those funds are missing. Right? So those are gone, and there's, at least if you dig through the articles, they talk about how they spent $10 million to keep another firm afloat. So I would imagine that if you did get any percentage back of the frozen money that you have in these exchanges, it's going to be significantly less than even what the assets by themselves are valued at. All right, so we'll flip over here to Seeking Alpha, and let's start brainstorming some ways how this could impact the stock market, right? On the surface, it would seem like a huge loss for the stock market just because capital has evaporated, as I keep saying. So it no longer exists, or it's tied up in bankruptcy hearings, and no one's going to see it for a long time. So that would insinuate that it would be bad for the stock market. But if we look at this chart as our first point of reference, this is a year-to-date chart. We have the SPY, QQQ in blue, and Bitcoin is the purple line. Now, I just picked Bitcoin because it's the most, popular cryptocurrency. And it also, although it's down significantly, there's been very little talk that Bitcoin, would go to zero. I'm not saying it won't happen. I'm just saying that it seems like Bitcoin was obviously propped up by enthusiasm. However, it's held a little bit of a baseline even during these difficult times. And I think one of the positives that you see right here in year to date is how much farther Bitcoin has fallen when you compare it to the S&P and the QQQ. So we had this big takedown here back in May, and the market was sliding in the same direction. But you see what starts to happen right here in June, and it's almost like a decoupling of the Bitcoin price to the same action that the stock market sees. And there was a lot of talk in 2020, 2021 on how much consistency there was with highs in the stock market indices going up on the same days that Bitcoin goes up, and vice versa. And now what we're starting to see is Bitcoin have significant moves down on the negative crypto news, but the stock market either holds flat or very, very recently here, if we switch to the 1 month chart, and here you see that beginning on November 8th or so, the stock market, both the S&P and the Qs, have actually went up a little leg, while Bitcoin and all this negative news has come down significantly in that same stretch. So if you took a starting point of 1 month ago, the SPY's up 8%, Q's up 6.4%, and Bitcoin's down 14%. So to me, this is good news if you're a stock market investor, because you're seeing a major move to the downside in Bitcoin, but you really haven't seen the same thing in stocks themselves. Okay, next up, I built this little stock comparison here in Seeking Alpha, and I tried to take the crypto stocks, the best ones I personally could think of, Coinbase and Square, as having a strong association with cryptocurrency, and then compare that to ones that I would say have much less exposure to cryptocurrency. So Apple, as far as I know, has zero. Now, they may have some crypto holdings way back on the balance sheet somewhere, but I've never really heard that Apple was much of a participator in this crypto world. Google, I know, has done some investments, and they also have some small businesses in their incubator tied to crypto, but they've never like laid the company out on a crypto foundation, right? They've obviously are going to get hurt by the fact that these crypto advertisers who spent, God knows what in 2021, they're certainly not spending that this year. So Google will get hit, but it'll be in more of an advertising way. And the thing about advertising is, you lose a leg. So let's just say you lose crypto as a huge, advertising input of dollars. So while they go away, there'll be other things that can creep up and still keep Google on the positive. So we've heard a lot of talk about competition in the automobile space. So car advertisements may start to increase even though crypto went down. And you also have the election, midterm election here at the end of the year. So that's going to help kind of close the gap a little bit. And TBD on how competitive the Christmas season will be from an advertising space. So while Google, I'm sure, had a significant impact, they also are diversified enough, I think, to absorb at least some of it. Costco, I guess I picked Costco because I can't see any relation to crypto whatsoever, and they've been doing very well during the pandemic. And then Fortinet is just a cybersecurity play. In fact, it's one of the original cybersecurity stocks, if you will. So they built an empire well before Bitcoin was even mentioned. So we'll sort of look at these 6 stocks, and let's just look at their performance across several different time periods. So you have total return right here. You got your name scrolling against the top. 1 month, Coinbase down 13%, Square up 42%. Very surprising. Apple up, Google up just barely, Costco up, and Fortinet up in the teens. But if we look across the 1 year and what that did to Coinbase, minus 84%. Square, big Bitcoin supporter, they also got taxed pretty hard on that. Apple stayed about flat. Google lost 34%. Costco, though, stayed about flat, in fact, almost up 2%. And Fortinet down minus 16%. But this, to me, is good from the standpoint of Apple and Costco, and I might throw Fortinet in there as well, in the fact that what Coinbase lost is nowhere near the same kind of thing that you see in stalwarts of the stock market. Even if we look at Google minus 33%, it's doing much better than Coinbase, certainly in that degree. And Apple and Costco prove to us that you can have winners in this 1 year time period where Bitcoin went from hero down to the bottom. All right, so now let's think about investing dollars coming into the crypto market versus the stock market. So just a quick scan, you can see here, hopefully you can see that I just typed in crypto outflows on Google in the news section and just kind of take a peek at these headlines, right? Not dig too far into it. But exchange outflows hit historic highs as Bitcoin investors self-custody. So what they're saying is people are getting out of the exchanges and potentially storing their funds in a cold wallet, right? But either way, they're taking them off of the exchange market. Crypto exchanges see record high week of Bitcoin outflows. Crypto exchange outflows hit historic highs. You see, all these headlines are basically the same. Now, in some cases, people are just moving their crypto keys to a cold wallet. I get that. It's not all of the money is leaving crypto in general, but it doesn't take a genius to look at our Bitcoin price chart here to get the sense that there are others who have just simply cashed out, period, sold their stakes and just decided to go in a different direction entirely. Speaking of different directions, this article on Seeking Alpha, November 7th, investors were net buyers of fund assets for the second straight week. And this is on November 7th, right? So we're actually a week or so past this headline, and we've already seen a couple more up days in the market. And if we look back on where that story probably started to materialize pre-November 7th, Bitcoin for at least the 1 month stretch was actually in the positives. Then it starts to take a major decline. Interestingly enough, though, after these outflows, the stock market starts to see positive signs. And we go through the stats on this inflows article. Money market funds led the charge as they attracted $35 billion. Equity funds garnered $9.6 billion. But money market funds are sometimes a holding place before you do move into stocks or other investments, right? So that's something to keep in mind. ETFs, exchange-traded ETFs, saw $17.5 billion influx of investor capital. At the helm were two of the largest funds on the market. The SPY attracted $6 billion of inflows, while the core S&P 500 took in $1 billion of investor capital. At the other end of the spectrum, we were talking about QQQ earlier, the QQQ and the iShares total U.S. market noticed the largest amount of outflows. So the QQQ had a ton of outflows. This is pre-November 7th, right? This is the week or the report ended on November 7th. Let's see how that matches up with the chart. So QQQ is blue. And I guess you could say running into this territory, it was coming down here, certainly from the week prior. You had outflows here. And I couldn't find the most recent report, but my guess is both S&P and QQQ saw significant inflows for the next period that would be reported, which would be, roughly November 7th through November 14th. We can see on the chart how the price action did there. All right, so within those charts, if we think about, outflows / losses in the crypto space, also / funds being held hostage, that still has not impacted inflows into the stock market. We're still seeing an increase, a small bump on the stock market as soon as we got that CPI report. How long will it last? It's hard to say. And whenever you have one asset class going down and the other one going up, it breaks out any correlation that folks might be worried about. And in my opinion, it kind of leads to the thought process of how many people are selling crypto to get into the stock market. Now, if you just sold out of crypto or you just got your money out of crypto, you probably have a pretty sour taste in your mouth from an investment standpoint. But if you're like me, certainly with tech stocks and QQQ, a bond fund isn't going to be the type of investment you make, right? I'm not going to go out. Me personally, I'm not interested in any sort of bond funds at 5%, right? I'm building this out for a much longer time period. How many investors at the hedge fund level had positions in crypto, Coinbase, whatever? People don't pay investment firms to sit in bonds, right? They could do that themselves. They're not going to pay 2% fee to put the money in bonds. They want some application of the funds, even if the horizon for returns is 3 to 5 years, they are okay with that. They want eventually to recoup money that they've lost. So the pressure is on an investment firm essentially to not buy bonds, right? Or have a portion in bonds, but then start to think, how can we correct this mistake we've made over the next 3 to 5 years? And you would have to think that the stock market is one of those options. All right, the other thing that I think is interesting to think about is how much froth was just eliminated over the past year from the economy, right? It's one of the things that we're chiefly worried about. Certainly Jerome Powell is, when you talk about inflation, right? When you talk about the housing prices and all the things that go along with it. And what we're seeing materialize right now is a big chunk of froth being eliminated that does not have an impact on the stock market. So if we think about that first headline that I led off with on CNBC that said, $2 trillion, investors have lost $2 trillion since November of 2021. And if we compare that with some heavy hitter stocks, if we go to market cap here, and we think Apple is worth 2.36 trillion in terms of market cap, you can see Microsoft is under $2 trillion in market cap. Google's a little weird because they have the GOOG plus the GOOGL stock. Not sure what those combine to. Amazon is a $1 trillion stock. Tesla, Nvidia, you get the picture. Basically, eliminating $2 trillion from the overall investing community is not that much different than Apple disappearing from the stock market. And if you think about the impact that would have on so many funds to lose the top stock in the NASDAQ, it would be absolutely incredible. You could also look at it another way. You could say, well, heck, Amazon's $1 trillion, and let's combine that with Tesla and Nvidia to get to $2 trillion, right? So imagine Amazon, Tesla, Nvidia going bankrupt. So when you lose $2 trillion in wealth, right, paper wealth, you just have less spending power, right? You also have less borrowing power in a lot of cases, and we have seen that happen, and we're still holding pretty strong on the stock side. All right, before you go, don't forget to check out that Seeking Alpha special offer. My affiliate link is in the description. I hope everybody's doing well. We'll see you on the next video.